What if the most convincing person you ever met wasn't a person at all? What if the most brilliant business opportunity you ever heard wasn't brilliant, and the company behind it didn't even exist? We live in a world where seeing is no longer believing. The ancient art of the con, a game played in back alleys and boiler rooms, has been supercharged with technology. It's been automated, digitized, and scaled to a level that would make the swindlers of the past look like petty thieves. Today's greatest scams are invisible. They move at the speed of light, and they target our deepest psychological triggers with terrifying precision. This isn't just a story about losing money. It's a story about the slow erosion of reality itself, and how the scammer's playbook is evolving faster than our ability to keep up. The original blueprint, the source code for nearly every financial lie ever told, was written by a man named Charles Ponzi. In 1919, he didn't have algorithms or viral marketing. He had a simple, intoxicating promise, a 50% return on your investment in just 45 days. His supposed method was a complex arbitrage scheme involving international postal coupons. It sounded clever, technical, and just confusing enough that most people didn't question it. But the method was irrelevant. The real engine of his scheme was human psychology. He paid off the first wave of investors with money from the second wave. Those early winners, flush with cash and disbelief, became his walking, talking advertisements. They created an explosion of social proof. Soon, everyone from factory workers to policemen were lining up to hand Ponzi their life savings, not because they understood postal coupons, but because they saw their neighbors getting rich. Greed defeated logic. But that was just the warm-up act. Ponzi's scheme was manual, slow, and ultimately fragile. What happens when you take that same code and plug it directly into the heart of Wall Street? That's when the lie gets a promotion. It stops wearing a flashy suit and starts wearing a boring one. Bernie Madoff was the evolution. His scam was a masterpiece of deception precisely because it wasn't exciting. He didn't promise to double your money in a month. He promised quiet, steady, predictable returns of 10 to 12% a year. Every year. In the volatile world of high finance, that consistency was a holy grail. Madoff sold the illusion of safety. He built an aura of exclusivity, turning down potential clients to make his hedge fund seem even more desirable. He wasn't targeting the desperate, he was targeting the financial elite, charities and university endowments, people who thought they were too smart to be fooled. For decades, he ran the world's largest Ponzi scheme, not with a secret product, but with fake account statements and the power of his reputation. When the 2008 financial crisis hit, and his clients all tried to cash out at once, the $65 billion illusion vaporized. This same ghost now haunts the digital world. Crypto platforms like Celsius and Voyager offered the modern version of Madoff's promise. Safe, high-yield returns on your digital assets. They presented themselves as banks, but behind the curtain, they were operating like reckless hedge funds, making incredibly risky bets with their users' money. When the market turned, they collapsed, revealing the same old Ponzi math underneath a shiny new crypto interface. But these were still, at their core, empires built by a single, charismatic liar. The truly devastating scams are the ones where the lie becomes the business model, and an entire corporation learns to believe its own fiction. Welcome to the corporate mirage. In the early 2000s, Enron was the 7th largest company in America. It was hailed as a revolutionary innovator, a titan of the new economy. Its executives were on the covers of magazines, celebrated as geniuses who had cracked the code of modern capitalism. But Enron was hollow. It wasn't a company. It was a theater production. Using a dizzying network of offshore shell companies, executives hid billions in debt while inventing profits out of thin air. They created a culture where questioning the numbers was a career-ending move. Even Arthur Andersen, one of the world's top accounting firms, signed off on the fantasy until the whole $74 billion house of cards came crashing down. 2 decades later, history repeated itself as a tech bro tragedy. FTX was supposed to be the future of crypto, a safe, regulated, and trustworthy exchange led by a disarmingly brilliant visionary named Sam Bankman-Fried. He charmed politicians, regulators, and celebrities. Tom Brady, Gisele Bündchen, and Larry David all told the world FTX was the place to be. But behind the billion-dollar marketing campaigns and the talk of effective altruism, FTX was running a shadow bank, secretly funneling billions in customer funds to its sister trading firm, Alameda Research, to cover its own catastrophic losses. It was Enron with a blockchain veneer, a fraud so brazen it left the financial world speechless. Enron and FTX had to go to great lengths to cook the books. But what if you could operate in a brand new world, a digital Wild West with no books to cook in the first place? This is the decentralized heist. The world of cryptocurrency promised to build a more transparent and fair financial system. Instead, for many, it created the perfect laboratory for fraud. We're not just talking about Ponzi's anymore. We're talking about scams baked directly into the code. The most notorious is the rug pull. A team of anonymous developers creates a new crypto token, hypes it up on social media with promises of being the next Bitcoin, and convinces thousands of investors to pour money in. Then, in an instant, they use a hidden backdoor in the smart contract to drain all the invested funds, disappearing forever with millions. Your money is gone and there's no one to call. Even more sinister is the honeypot scam, where the code is written to let you buy a token, but it's impossible to sell. You watch the price soar on your screen, thinking you're a genius, but your investment is a ghost. It's a digital trap, and you walked right into it. These heists are often coordinated in the shadows of the internet in private Telegram and Discord channels where armies of bots and paid influencers create artificial hype waves, luring in unsuspecting retail investors just to dump worthless tokens on them. They've turned market manipulation into a science. So far, these scams have been after your wallet, but the next evolution of fraud is coming for something far more valuable: your perception of reality itself. The con artist is no longer human. It's a ghost in the machine. In 2020, a bank manager in Hong Kong received a call from the director of a company he'd spoken with many times. The voice was identical. Same tone, same accent, same speech patterns. The director authorized a $35 million transfer. The money was sent. But the director never made that call. It was a deep fake, an AI-generated clone of his voice. That was just the beginning. Today, the scams are even more personal. The FBI has issued urgent warnings about a scheme called pig butchering. Scammers, often using AI-generated profiles and scripts, spend weeks or months building deep, intimate relationships with their victims through text messages and social media. They become a trusted friend, a romantic partner. Once the trust is absolute, they casually mention a guaranteed crypto investment opportunity that has made them a fortune. They guide their victim through the process, convincing them to invest their entire life savings. Then they vanish. The emotional devastation is often worse than the financial loss. This manipulation is now happening at scale. AI-powered bot farms can generate thousands of fake articles and social media posts to create the illusion of overwhelming support for a particular stock or crypto coin, artificially pumping its price before the creators cash out. The next financial bubble might not be inflated by human greed, but by an algorithm. But the truly perfect scam doesn't need to break the law. It just needs to rewrite the rules. The most shocking part isn't that these scams are coming. It's that you're already living inside the biggest one of all. It's the scam you sign up for. When you use a free stock trading app like Robinhood, it's not free. They make billions through a controversial practice called payment for order flow, selling your trading data to giant Wall Street hedge funds, who can then execute trades milliseconds before you do, profiting off the information you just gave them. During the GameStop frenzy, this system was thrown into the spotlight when millions of retail traders tried to fight back, only for the platforms to suddenly restrict buying, a move many saw as the system protecting its own. It's not illegal, it's just the business model. The same design is everywhere. Buy now, pay later. Services are marketed as a convenient way to shop, but they are built on algorithms designed to encourage impulse spending, quietly pulling millions of young people into cycles of debt with confusing repayment terms and steep penalties. Gig economy apps present themselves as platforms for entrepreneurial freedom, yet they use opaque algorithms to set pay rates, constantly tweaking the formula to pay drivers and workers the absolute minimum they're willing to accept. This isn't a back-alley con. It's a multi-trillion-dollar industry built on a simple principle: profit from complexity. And then it will sell you the key.